China just cracked down on Bitcoin again. Time to sell? Starting in May, China banned all its financial institutions and payment companies from providing crypto-related services. And recently, China's war on Bitcoin just hit a new level with its latest crypto crackdown. What did China crack down cryptocurrencies, mainly Bitcoin? What is the impact of this crackdown on the overall crypto market? Moreover, how does it affect the price of different currencies? Hey guys, welcome back to the channel. We're back with another interesting yet informational video to help y'all with your crypto-related queries. So for today's video, we'll talk about how China's intensifying the ongoing crackdown on cryptocurrencies that's been around for a while now, its impact on digital assets, and of course we have the price predictions. So without further ado, let's dive in. But before that, we'd really appreciate it if you guys would like the video and subscribe to the channel for more videos like this. As for the people who are new to the crypto world, you guys can ask whatever questions you have in mind. We'd be glad to answer them in the comments section. Let's begin. So what's happening is that China got very serious about privately mined digital money and cracked down on Bitcoin, because of which we saw the market for Bitcoin tumble down a cliff. In a worldwide context of economic instability because of the preceding COVID pandemic, soaring product costs, and international pressures, the People's Bank of China has emphasized its direction towards financial, employment, trade, and investment stability. Digital currencies have shown immense instability as of late, and a development pattern that recommends a bubble. Focusing on stability and for a monetary design that's intended for supporting as opposed to dominating the real economy, it should come as no surprise that the Chinese have limited digital forms of money to forestall a financial shock if this bubble explodes. The ban on cryptographic money expressed that Bitcoin is a specific virtual product that isn't issued by a financial authority, because of which it has no money-related properties, for example, being a lawful tender. It is certifiably not a real currency and can't be utilized as cash. This focuses on a more profound fundamental inquiry. Who has the right to issue money? This is a long-standing question in economics. The way that China is the first ever mover in attempting to contain this bubble is a reminder that the nation is at the cutting edge of digital currency development. Private digital currency has been criticized globally for its capability to empower unlawful, untraceable exchanges. Conversely, the advanced RMB leaves a total record of money exchanges in the possession of the state. China's relationship with cryptographic money has advanced throughout the most recent couple of years. China's been the world's most significant center point for digital money mining, with a portion of around 66% of worldwide creation. Yet, the Chinese specialists have moved to a strategy of containment reflected in a tightening of guidelines in 2013, 2017, and now the most recent attempt to restrict cryptocurrency services. China's national bank said on Tuesday that it had called for the closure of an organization that was suspected of providing software services for virtual currency transactions. The statement given by the Beijing office of the People's Bank of China likewise cautioned organizations not to offer any type of assistance identified with virtual cash, including giving business premises or marketing. In 2013, the nation ordered third-party payment providers to quit utilizing Bitcoin. Chinese authorities shut down token sales in 2017 and swore to keep targeting crypto trades in 2019. But typically, each time Beijing has lashed out at the crypto industry, the sting has worn off and the rules eventually softened. This time, however, appears to be different. As of July, a large portion of the world's Bitcoin miners have now gone dull after Beijing's call for a serious crackdown on Bitcoin mining and exchanging. China's government is doing everything they can to ensure that Bitcoin and other cryptocurrencies disappear from the Chinese financial systems and economy, said Fred Thiel, the CEO of Marathon Digital Holdings and a member from the Bitcoin Mining Council. Why now? Why has China essentially declared a war against digital forms of money in 2021? We're all wondering, said Nick Carter, founding partner at Castle Island Ventures. One hypothesis is that it's basically a part of the broader law and order push ahead of the 100th commemoration of the Chinese Communist Party this year. Another hypothesis is that China is clearing the runway for its own personal digital yuan, a national bank computerized cash that's been developed since 2014. Part of this is to ensure the adoption of China's central bank digital currency, and part of this is most probably to ensure financial surveillance activities are able to see all economic activity, Thiel said. The computerized yuan could, hypothetically, empower the government's more noteworthy ability to follow spending in real time. However, Carter fights that Bitcoin and the advanced yuan are diverse to the point that they can't actually be viewed as immediate contenders. That's certainly the most commonly cited reason, Carter said. I just don't know if I believe it. They're such distinct systems from each other. The most probable inspiration, as indicated by Carter, is that Beijing is hoping to stem capital surges through stablecoins and cryptographic forms of money. China choking off the flow of yuan to crypto is a big deal, he said. Moving on to the effect on the price of Bitcoin. When it comes to the price of Bitcoin, stemming all Chinese retail into crypto totally moves the needle, as per Carter. Thiel accepts that restricting Bitcoin and crypto will actually help Bitcoin in the long haul. If China's goal was to kill Bitcoin by shutting down 50% of the mining capacity and prohibiting trading, thus crashing its value to punish Chinese holders, it didn't work. Instead, Bitcoin proved its resiliency, and the trades just moved offshore, and miners elsewhere will take up the slack. Elise Killeen, founder and managing partner of Bitcoin-focused venture firm Stillmark, brings up this entire discussion might be a moot point, as the government's ability to impact a Bitcoin boycott will just keep on disintegrating after some time. She also said that I'd expect this type of news to have less of an impact on Bitcoin's exchange rate than it has historically, she said. It's also true that there's been some level of industry inoculation to this news. Bitcoin has been banned many times in many geographies, and yet today adoption is outpacing internet adoption at a similar life cycle stage. Bitcoin has dropped 3.6% in the last 24 hours and has now dropped more than 8% in the last week as China continues with its crypto crackdown. The market as a whole has fallen almost 5% over the day, according to CoinMarketCap. So guys, that's it for today's video. I hope it was a big help to you. Also, tell us what you want to see next. Don't forget to click the bell icon. Thanks for watching. See you in the next video.